Hello and welcome back to goldstocktrades.com. This is Jeb Hamwerger and today is December 24th, 2012. I wanted to update my readers going into 2013 in some important technical developments which I think that could occur in 2013. Taking a look at this chart, which describes the first 4 years under the first Obama administration. We had the first 2 years, we had very strong outperformance of the gold bugs, which is the blue line, and the S&P TSX Venture until about 2011. So 2009, 2010, we saw an outperformance of the mining equities over the general equity market, way over the dollar, which is still in negative territory, and then over bullion, outperformance of bullion. And then as 2011 came in, there was some concerns that, will the Fed continue doing QE2 and the expiration of QE2? Now remember that the government must be able to, will try to disguise inflation, and when you see this sort of outperformance over the S&P 500 and over the dollar, there's great concern. So then at the end of QE2, we heard Operation Twist. And this took some of the speculative fervor out of the mining equity market. And we've been in this sort of decline in the TSX Venture for close to 22 months. And it's a very extended decline because most bear markets average around 18 months. So 22 months, it's a little bit extended. We think that a reversal could be occurring soon. It's undervalued considerably to gold, and we're beginning to see some developments in the dollar and in industrial metals and a recovery in Asia, which could spark a rebound in the venture, which was outperforming the first 2 years of Obama's administration of his first term, and may outperform once again the first 2 years of his second term administration. Take a look at the dollar. The dollar is on the verge of possibly breaking through the 79 level. Look at the head and shoulders pattern here. We just heard Bernanke announce at the December 11th meeting the expansion of QE3 to treasuries, expanding the balance sheet. This is the first time since QE2. The dollar looked extremely bearish. We could see a break at the 79 level, which could take us to those 2011 levels. This could cause a reversal in the precious metals market. So, and in the undervalued mining equity. So keep a close eye on the US dollar after this recent Fed action. We do think that it's going to go lower in 2013, possibly with a target of 74. On the other hand, we're seeing some strength in the yuan. We're seeing a recovery in Japan with the new election. The Nikkei is hitting new 52-week highs. The Chinese market is hitting new 52-week highs. So this may indicate that copper, that due to the economy in Asia's improving, copper may be on the verge of an upside breakout. And if you notice over the past 15, 16 months, copper's been in this triangular coil pattern, which if we do see a breakout to the upside, it could be very powerful in copper. So we could see a very powerful risk on rally, especially in the undervalued industrial junior miners on the venture. I know some of my subscribers have been concerned about the pullback in gold and silver and some of the damage that has been done, but the uptrend is still intact. Looking at the gold chart, that it's pulling back to the 1650 level where there's strong support, and we think that it's going to hold. Notice the RSI, it's at a very oversold level, similar to what we saw at the end of 2011 when we had a very powerful balance the first quarter of 2012. So look for this long-term support to hold, and a possible reversal off these oversold levels. So stay tuned, and thank you for viewing today's video, and I look forward to 2013.